long-term, medium-term bottoms do not leave unfinished business, such as this very wide gap. So the market will have to come and fill that gap. The question is it going to rally first to the upper expected move on CPI and then come back and fill the gap? Or are we going to get a gap fill and then a rally? My personal preference, I would like to see a double bottom, fill the gap, get this unfinished business done with, dealt with, and then rally. Welcome back, you legends. I'm Dr. Cal. Let's get right into this quick market update video. Yesterday has to be one of the craziest trading days I've seen in years. We had a huge dump right off the bat. Then it got bought up, and pretty much every single 15-minute candle, 20-minute, 30-minute, hourly candle since that bottom was green. The market ripped like there was no tomorrow. We hit both our downside and upside targets in one single trading session. I haven't seen that happen in ages. The kind of price action that usually takes 2, 3, 4 days happened in one trading session. S&P 500 closed up 1%, Nasdaq doubling that at 2%, Dow Jones up 0.3%, and the Russell 2000 up 0.3%. We take a look at the stock market map, split right down the middle. Big cap tech leading, and semiconductors bright green. In the trading community, I did have a trade idea about AMD 2 days ago, right before it broke out. I shared it in the Discord community. Here's the note that I put out Tuesday morning before the market opened. This is the AMD divided by SMH chart, which shows AMD's performance relative to the semiconductors index. Notice how every time AMD opened above the 16-week moving average, the dark green moving average, this moving average, every single time the stock immediately had an impulsive breakout. Today, AMD is set to open above the 16-week moving average. Look at this. Every single time AMD opened above the 16-week moving average, we had an impulsive breakout, consolidation, impulsive breakout, consolidation, impulsive breakout, consolidation. And what do you know? AMD had a huge 2-day impulsive breakout. It actually exceeded my upside target. I was looking for a conservative 1-day target of about $145 for AMD, right around this prior level of resistance. We ended up exceeding that level and rallying all the way up to this key resistance line for AMD. Here's a detailed trade idea note that I put out in the trading community. This is AMD on the daily chart. The stock is set to open above the 5-day moving average for the first time since it topped 20 days ago. It is also set to open just above the dark blue resistance line. This resistance line, we tend to have a breakout as soon as AMD opens above such a resistance line. This could be a decent trade as long as a tight stop is used. Entry at 138, take profit at 144, stop loss at 136. That gives us a $2 risk for a $6 reward. For a risk-reward ratio of 1 to 3, AMD ended up not going any lower than 136, and it did end up realizing the target of 144 just 1 day later. So this was a great little trade. Full disclosure though, personally, I did not trade this setup. I don't always trade all the setups that I share. In fact, most setups that I share in the trade setups channel are kind of like an open buffet. Here, take a look. I like this setup. This is my target. This is my stop loss. That's kind of what I do in the trade setups channel. In the My Trades channel, that's where I post all of my trades and investments in real time. If you like that sort of stuff, check out the Money Time Machine trading community. It's $30 a month if you go for the annual membership, and you have to click pay annually for the annual membership, and it's $55 a month for the monthly membership. Personally, legends, I don't like monthly memberships because the market is very unpredictable. You can have very slow months, very active months. So I really don't like monthly memberships. However, it is there if you want to try out the community, see if it's a good fit. And if it is, what I recommend and what most members tend to do is they tend to switch over to the annual membership to get that 45% discount. It is the absolute best way to get up-to-date access to all of my real-time market analysis, trade setups, trade ideas, all of my trades and investments. Ask me any question you like. And it's obviously the best way to support my work and the YouTube channel. So if you do that, I thank you very much. Other ways you can support the channel is by smashing that like button right in the face as you watch this. So let's take a look at the different sectors. Today leading technology, again semiconductors leading. We saw that AMD setup after being the biggest loss leading sector throughout the last couple of weeks as the market entered that quick little correction. One day performance, technology leading, followed by cyclicals, communication services, full risk on move day. We have defensives at the bottom, financials and energy at the bottom, full risk on move today, full bullish rotation kind of day. We'll get more into that in a second here. If I take a look at the futures market, as of right now, I'm recording this 5:15 a.m. Eastern time. Market is flat, VIX slightly elevated. We do have the PPI coming out this morning. Let's take a look now at the daily chart for the S&P 500. Again, the market did all of the things that we were looking for it to do over the course of several days, and it did it in one single day. It moved down, filled the gap, got that unfinished business resolved. Remember, I talked about that a lot in my last video. Unfinished business, unfinished business. I don't like bullish setups, upside trades when we have unfinished business down below. And what did the market do? It finished the business down below. It filled the gap. Then it rallied all the way to my upside target, 555, this prior level of support, now resistance. We have a very clear range here on the daily chart for the S&P 500. We can see it here. Very clear range. We rallied all the way to the bottom of the range. This level should be now respected. It was a key level of support. Once it broke through, it is now key level of resistance. And again, it should be respected at least in the near term. I expect the rally to stall here, give us a nice pullback, and then that pullback to be bought, make a higher low. And that should be the actual objective bullish kind of entry to go long at this market. The market yesterday did repair a lot of damage that this sell-off has done. We had a small bodied candle, slightly larger the next day, couple of hammers, then a huge hammer candle with a bullish close near the highs, filling the gap at the lows. This is now a clear bullish reversal pattern. However, it did rally all the way to the top of my upside target. So an entry here is actually quite poor in terms of risk reward. I don't like a bullish entry here. Instead, I would like to see pullback back to the top of this prior range, somewhere in here at 549 for the S&P 500, and then look for a bullish hammer kind of signs of a reversal at 549. And that will, in my opinion, be the objective bullish entry for the S&P 500. If I take a look at the Nasdaq 100, pretty much the same thing. The Nasdaq rallied all the way to the top of this resistance line. It closed above it today for the first time since that top in August. This is a bullish sign, meaning this rally should now be respected. This is likely the beginning of a new uptrend, and this downtrend is likely now ending based on what I'm seeing from the Nasdaq closure yesterday. Just like the S&P, I'm looking for a pullback, that pullback to be bought at, let's see, 459.2 for that pullback to be bought, and then for a higher low to be established. And that should be the objective entry for an upside trade. So now let's take a look at the hourly chart for the S&P 500. And I do have the replay feature here. So let's start it and see what happened. This was the setup that we had before CPI. I was hoping for a pullback to 537.5, somewhere in here in this band of support to fill this gap. So let's see what happened. Let's play this. We ended up going all the way down to this gap fill level, slightly above 537.5. Gap filled, so that was job done. And then we had a huge bounce back up, and we closed all the way at the top of the expected move for the day. So what does the setup now look? We are now at resistance. This should be respected. That means the market should now either consolidate or give us a very positive, healthy pullback back down to the upper end of this range. That is 549 for the S&P 500. and I would look for a reversal here for a trade back to the upside, potentially back all the way to the upper edge of this range, heading into the FOMC. I still expect the S&P 500 to make a new high by the end of the year. Whether that happens before the FOMC or after it in September, I'm quite suspicious of that because September, October tend to be very seasonally bearish in election years. This is true in all election years. We tend to have two negative months. That is September and October. And to be fair, to be honest, to be frank, September, we've actually been tracking closer toward this kind of seasonality and not the open field kind of excessively bearish kind of seasonality. We had a top in August, pulled back, and we rallied again here in the middle of September. Just be aware that we do not tend to exceed new highs in September. So even though the market is now looking more bullish, and I'm just looking for a pullback to be bought at 459 for the S&P 500, I still do not expect these prior highs to be taken. I'm looking more for something that kind of looks like this toward the end of next week and the Fed rate cut. I'm still looking for more sell-side activity after the Fed cut and in October. So with seasonality in mind, let's go and take a look at the Nasdaq 100 hourly chart. Massive key resistance line rejected every rally since the downtrend began. We closed above it yesterday. We actually slightly exceeded my upside target of, let's see, 465.7. We closed at 468. That tells us that this rally should be taken seriously. Another kind of hint was in the early session when the S&P 500 did this, formed an equal low where the Nasdaq 100 formed a higher low. That to me indicated a bullish rotation into the Nasdaq 100. Here it is. If I take a look at the Nasdaq daily chart, this is the Nasdaq relative to the S&P up above. This is the S&P 500. This is the Nasdaq 100. I use the triple Qs divided by the SPY to gauge the relative performance of the Nasdaq relative to the S&P. And every single time we closed above the 10-day moving average on this chart, we tended to have a nice, healthy rally. I actually talked about this in the early session yesterday. Here is the note. You can see it. I posted it just before the middle of the session, before noon. Everyone top to bottom, Nasdaq relative to the S&P. And then we have the S&P daily chart and the Nasdaq daily chart with the unfinished business below now dealt with. I now believe if the Nasdaq SPY ratio chart closes above the 10-day moving average, it will significantly increase the chances that the bottom has been made. In the downtrends, we've seen this ratio chart consistently trade below the 10-day moving average, and the first close above the 10-day has confirmed new trends. And what happened yesterday? We closed above the 10-day moving average. So this should now be considered the beginning of a new uptrend. Now, beginnings of new uptrends tend to be very choppy, so do not be surprised if we see a huge dump today, as long as 549 for the S&P and 459 for the Nasdaq right here. This is now new support for the Nasdaq. The bottom of this prior range right here is now support for the Nasdaq. The exact level to add it to your chart is, let's see, 458.8. Anywhere in here, if we get a pullback that holds, that will likely be the next higher low. So I'm looking for combination. Maybe we get a consolidation today and then a sell-off tomorrow, or we get a pullback today and then the rally continues tomorrow, Friday. Doesn't really matter. The sequence is not important. The only important thing is to look for a bounce, for hammer candles, bullish reversal signals in this demand level between 458 and 460 for the Nasdaq 100. For the S&P 500, it is this level. Let me draw it on the chart. Let me add it. This is now the next key level of support right in here at 540, 548, 549. Anywhere in here is good enough in my book. So in the medium term, near term, I'm looking for the Nasdaq and the S&P to give us a bullish kind of objective bullish entry at this demand level, either consolidation, then we get a pullback, or we get a pullback straight away on PPI, and then we get a continuation to the upside on Friday. Either one is fine with me. What I would say though is an entry here at this level is not an objective entry. We are already at the upper expected move for the week. We are already at the upper expected move for the week, both the S&P and the Nasdaq. This is not an objective kind of good RR risk reward entry. Personally, I would not enter the market here. I would look for a pullback first, higher low to be established, and that would be an objective entry in my opinion. Let's take a look at the futures. The futures briefly exceeding this level of resistance. Realistically, we're trading now toward the bottom of this prior range. Now I am expecting profit taking to take place here and to give us that pullback. That is for the futures and the real money market. Nasdaq 100 futures rallied all the way to the top of this kind of resistance line. Again, looking for a profit-taking sell-off pullback either today or tomorrow. Either one is fine with me. VIX, let's take a look at the VIX. The VIX has pulled back to the upper edge of this prior range. I'm looking for the VIX to bounce back slightly, and that should give us that pullback in the S&P 500 and the Nasdaq. That buyable, in my opinion, buyable, tradable kind of bullish pullback. Let's take a look at the Russell 2000, multiple hammer candles, even though they made lower lows. Nasdaq, S&P made either equal or higher lows. I think the overall market, including the Russell and the Dow, are now looking more positive, more bullish. Look at the Dow Jones, went all the way down here, took out this prior low. With that being said, just keep in mind the Nasdaq S&P 500 ratio chart indicates that the Nasdaq should continue to be the outperformer in this rally into the Fed meeting next week. And this is the XLY S&P 500 consumer discretionary relative to consumer staples. Double bottom with a higher low broke out yesterday. Very bullish for Amazon and Tesla. In fact, Tesla is probably one of my absolute favorite setups right now. I'm eyeing it like a hawk. I'm looking for that perfect entry for a kind of vicious short squeeze rally potentially next week. We'll see. High yield bonds up top, S&P 500 down below. High yield bonds, the smart money exceeded these prior highs. S&P hasn't done that yet. That tells me the S&P will likely make new highs in either November or December before we put in the final high for the final top for this cycle. The SPY relative to gold ratio, double bottom, broke out yesterday. Risk on versus risk off barometer. When the S&P is outperforming gold, it is bullish. When it's underperforming gold, it is bearish. It actually, the market tends to underperform gold well before the market top actually comes in. So it's one of those kind of my secret sauce indicators that kind of give me that time machine edge. We tend to see the breakdown in the SPY relative to gold before the market actually tops. So just a hint, wink, wink. Take a look at the SPY relative to gold chart, put it on top, put the S&P down below. And when you see a breakdown like this, that likely means the market is topping. Again, look at this big breakdown. The market ended up topping about a week later. Again, folks, I'm giving you kind of secret nuggets. Slap that like button right in the face if you enjoy this kind of stuff. Put to call ratio. This is the CPC put to call ratio. We went back up above 0.95. I talked about this in the last video. In fact, I said this, by the way, this very light blue line that you see, that is the daily read. This green and red is the 5-day moving average. The daily read heading into CPI exceeded 1.1. That typically means we get a bounce. When the put to call ratio is this extreme, and we did get that bounce. The New York Composite put in another hammer candle. With that being said, I'm still expecting the Nasdaq to lead the NYSE and the Dow Jones, kind of that old economy style stocks. Here it is, Nasdaq Composite leading. It is now clearly putting in higher low on the oscillator as well as the daily chart, looking bullish so far. We do have this key resistance line, and that kind of a big breakout in the market will only happen once we clear this major kind of bull flag that is forming. In my opinion, that will likely not happen until sometime in November. This is the 50-day breadth. We're looking at an improvement in market breadth. This means more stocks in the S&P 500 are actually now rallying versus selling off. If I take a look at the 200-day breadth, improved, yes, but it is still looking weak. We need to see the market consolidate for a few days and for breadth to improve. That'll be the kind of confirmation bullish sign that I'll be looking for. TLT relative to the S&P 500, the imminent doom indicator, this monthly chart needs to close above this orange line, the 10-month moving average. Once that happens, it will confirm the final cycle top. Hasn't happened yet. We don't know if it's going to happen by the end of the month. This is the kind of signal that you simply have to wait until the end of the month to know if it's confirmed or not. Other bearish signals, including the XLP relative to the SPY, has closed above the 50-week moving average. That is the number one signal in the three horsemen of the apocalypse. This is number one. Number two is the yield curve. It has already reversed and normalized. That's number two. Number three, and the final signal, is the TLT relative to the SPY. This also needs to close above the 10-month moving average by the end of the month to confirm final cycle top for the S&P 500. Later today, PPI coming out and initial jobless claims. If we get a negative reaction to these, look for that by the dip activity. 459 for the Nasdaq 100 and 549 for the S&P 500. Friday, we have the Michigan consumer sentiment, and then next week, retail sales on Tuesday. Wednesday is the big day. FOMC, Fed interest rate decision. In my opinion, if we see a rally heading into the FOMC decision, I expect kind of a blow off top on the day of the FOMC, and for the market to reverse either the next day or one day later. Kind of buy the rumor, sell the news kind of activity, something that kind of looks like this. Sell the news, and then we move back down in October and late September. Fear and greed getting a little bit of an improvement here in the fear and greed index. Market momentum improving. Fear and greed is improving. Stock price strength still flattening. Breadth is now down. It does need a few days to improve. If the Russell 2000, for example, pulls back less than the rest of the market into that 549 range. So when the S&P 500 begins this kind of a bullish, healthy pullback into here, if the Russell pulls back less than the market and then moves back up to make a higher high, something that looks like this, just a small little pullback in the Russell, maybe back to the closing price of yesterday, whereas the S&P, for example, pulls in deeper into that 549 level. The Russell does something like that, then I expect breadth to improve, and I do have a trade idea to trade something like this, a rotational breadth kind of thrust. And generally speaking, the way to kind of trade this kind of move, if you're expecting a breadth thrust, is to rotate out of the S&P and the Nasdaq and into the Russell. And these kind of rotations tend to happen every other day. So for example, if the market pulls back today deeply and the Russell does not, it only pulls back slightly, then today the Russell will likely be the outperformer. And for example, then tomorrow, those roles get reversed and the S&P and the Nasdaq lead again and the Russell kind of lags again. So look for something that kind of looks like this for the Russell today, and for the S&P something that kind of looks like this. That's all I have for you today. Let's just smash that like button right in the face on your way out, and I'll catch you in the next one. Bye-bye.
Oh, wow.